Well, the first story that we saw of the day was General Electric being investigated by several agencies and also reporting a dividend cut. With that type of a backdrop, we wouldn't have necessarily assumed that the markets would have rallied as strongly as they did today, but that's exactly what happened. We had the S&P 500 rallying 1.5%. All the way up to the Russell 2000, that was up 2% by the end of the day. So very strong price action, nice snapback rally, making up for most of, not all of yesterday's losses. But before we get too excited, we have to remember that the posture remains bearish according to the market forecast. So our trade application example today is going to come from one of those sectors that's really been struggling today on a bearish trade idea. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by Market Scholars. I'm your host, Brandon Van Zee. It's October 30th, 2018. For those of you that are new, first of all, welcome aboard. We're grateful to have you in our audience tonight. Remember, you can go to YouTube, click on subscribe, and while you're over there, make sure you check out our description area that'll allow you to sign up for our email distribution list. That'll not only allow you to see whenever we're posting these videos, but also give you a heads up on what stocks are giving you overbought and oversold cluster signals within the S&P 500. We're also heavy users of Twitter. We'd encourage you to follow us there. My handle is @BrandonVanZ. If you ever see any of these tweets regarding the Market Outlook video, we'd appreciate a like and a retweet if you get value out of these free videos on a daily basis. We also have a presence on Facebook. Make sure you're checking out our group at the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into the analysis here for the day. As you can see, I've got chart 4B pulled up in front of us. That is a chart that you can pull up yourself if you are a premium Market Scholars subscriber. But the way that we kind of look at this particular chart is effectively just a four grid that are showing the four major U.S. market indices here, the equity indices. And the S&P 500's in the upper left. We've got the Dow Jones in the upper right. We've got the NASDAQ in the lower left and the Russell 2000 in the lower right. As you can see across the board, it was a sea of green today. It's been a while since we've been able to say that. It's been a very ugly month, as most of you are aware, in October. And so it's nice to see an occasional green day here. We saw the S&P 500 up 1.57%. The Dow was up 1.77%. We had the NASDAQ up 1.58%, and then the Russell 2000 1.99%. Now, after saying that, notice that the colors of the charts are still red. And what I'm referring to there are whatever the most recent candle is, what's the background behind that candle, like in this case with the S&P 500 here, it's red. It's still red over here with the Dow Jones, and it's still red over here with the NASDAQ, and it's still red over here with the Russell 2000. So in other words, according to the market forecast, we still have a bearish posture from an intermediate term perspective. Remember, we're using the green line on the market forecast indicator that you can find on the Thinkorswim platform or other TD Ameritrade resources to help us set and establish that posture. So you can see that the green line in all of these cases remains in the lower reversal zone. And if the green line finds itself in the lower reversal zone, it doesn't matter if it's going up or down. As long as it's in the lower reversal zone, we would consider that strongly bearish. So today's big pop was nice to kind of rectify some of the negative price action that we saw yesterday, and hopefully can lead to some construction price action going forward. But right now, this is not a market that is off to the races. In fact, I think a lot of people, what they're kind of looking for is a flushing out event of some sort. A lot of times when we have these chaotic market moments like we're in right now, they end with some sort of capitulation where, a large portion of the investing community or the trading community just throws in the towel and says, okay, that to heck with it, I'm done. And you usually see, massive volume in a situation like that, and then a long lower shadow. Now, we did get some long lower shadows yesterday, so it's not to say that they're not there. It just didn't really give us that feel, that impression that it was done. It could have been a lot more chaotic at the end. That's at least what we've seen in the past. So anything can happen in the future, but that is one thing that you're going to want to keep your eye on because, we're in a more volatile market environment right now. Yes, it's exciting that we were up over 1% across the board today, but remember, it could just as easily turn out that we're down more than 1% tomorrow if the prior days of this month have been any sort of indication. Now, do keep in mind that, as I've been mentioning here in the videos recently, that we are entering into a more bullish period. November, December, January is what's noted as the market's best 3-month period according to Stock Traders Almanac. So, hopefully the calendar can help us out. Seasonality can help us out as we lead towards the Christmas shopping season, where a lot more retailers and money is being spent, and the economy is a little bit more robust. Hopefully that can kind of start taking some of the headline news. But obviously there's a lot of things that are going to happen between now and the holiday season. We've got the elections coming up very quickly. Midterm elections there, and then of course China and the United States remain in the news regarding trade wars, and whether Trump is going to get together with Xi and have some sort of a compromise of sorts to kind of end that skirmish that we're having there, because that's really what's weighing on the market's mind. We also have a lot of people concerned about what is the Federal Reserve doing, and will they continue to raise interest rates? A lot of folks expect the Federal Reserve not to raise interest rates in their November meeting, but they do expect them to raise interest rates in their December meeting at this point. So we'll just have to see. If the stock market continues to be extremely volatile, and we start getting signs that the economy is weakening to a degree because of that, then you'd have to believe that the chances of the Fed continually raising rates into the future might be muted a little bit more so than had been expected previous to that. Let's take a look at a few more charts here. So now that we know that we remain bearish, let's now kind of compare that to what's been going on with some of our 12 grid analysis here. Let's go over here to chart 4E. And this is our intermarket analysis 12 grid. And remember, this is designed to look at things that are beyond the stock market. Sometimes the stock market just isn't working, but there could be other asset classes that would be working. And so we like to keep our eye on some of these charts here. As a reminder, when we're looking at these various 12 grids during my presentation here, this is chart 4E for those of you following along at home. The background color will turn green automatically if we have a bullish posture using the market forecast green line, and then they'll turn pink automatically if we have a bearish posture using that market forecast intermediate line. So the VIX was down today. No big surprise there. If anything, I would have expected the VIX to be down even more. The VIX being down only 5.5% is really not that outrageous of a day. Considering that the S&P 500 was up 1.5%, if market participants really thought this was the end of this difficult period that we've been going through, I would have guessed that the VIX would have gone down a lot more. So keep your, put a pin in that and think about that for a little bit, because it is possible that today was just a little bit of a head fake in a continual down type of a move that we're in right now until we get some sort of a flush out event. As we look at some of these other charts here, you can see master limited partnerships were getting blitzed here before today. We were up 1.5% today on them, but that's been a chart that's been falling out of bed. Partially because of what's been happening with crude oil. Notice that crude oil down below here has really been falling out of bed as well. Of course, a lot of master limited partnerships are involved in the energy patch, whether it's transportation or pipelines or what have you. But do notice that the crude oil market right now is at a critical level where we're trying to retain this support level that had been in place since August. Notice around August 16th or so, we were trading approximately where we're trading right now. So, if you want to be bullish on commodities or crude oil specifically, then you're hoping that this chart does not break down further from where we're at right now. At this point, we could go ahead and say that this could be a double bottom if we do find upward price action. But that's a big if. At this point, we're still kind of just meandering around those lows right there. Now, one thing that is kind of catching my eye is in the lower left-hand corner. Notice the U.S. dollar. In this particular chart, it's UUP, but it gives us a good indication on what's happening with the U.S. dollar. As most of you are aware, when the U.S. dollar is strong, commodities are oftentimes weak because most commodities are priced in U.S. dollars. And as you can see here, this dollar has been really strong lately. As the stock market has fallen apart and investors have been fleeing risky assets, they're trying to go to a place that they view to be kind of a safe haven of sorts. And right now, the U.S. dollar, while still having some fleas on it on its own, is probably looked as a more promising worldwide currency than a lot of other areas where the economy isn't quite as strong as it is here in the United States. And so when the US dollar is strong, we do see a sell-off here in gold. It was down 0.24% today. We saw DBA, which represents ag commodities, down 0.34% today. And then I mentioned crude oil before, but it was down 1% today. So right now it looks like the dollar is not ready to give up the ghost. It wants to continue to be strong going forward. And remember, that can have an impact on multinational companies and foreign stocks as well. All right, speaking of which, let's go ahead and take a peek now at chart 4F, and that is our foreign stock 12 grid. And so as we look at this, one area of strength that we've been repeatedly mentioning, just because it stands out so much in recent sessions here, recent presentations, whether it's this market outlook video or the premium trading rooms that David and I discuss, but we do have strength in Brazil right now. Brazil is up 4.5%, as you can see, today alone. Now that is just adding to the gains that we've seen prior to that. So this is continued strength here. It wasn't just a fluke. Now remember, Brazil went through their elections, and apparently, the stock market liked what it saw out of the winner. And so we'll see if that can continue to be strong going forward. But if you are going to be bullish any foreign markets, it would make sense that Brazil could fit the bill there for you. Otherwise, it's been kind of a house of pain with a lot of the other areas of the world. Again, with a strong US dollar and a risk-off mindset for traders right now, it's hard for a lot of those foreign economies to kind of stabilize. And we are seeing significant downtrends pretty much across the board. India's been in a downtrend. China's been in a downtrend. Mexico has just fallen off the board. Notice that Mexico is down 18% in 3 months. Think about that for a second, right? People are squirming in their seats here in the United States because we were down 10% on the S&P 500 as of yesterday. Now we're no longer there. Yesterday we were in a correction. With today's bounce back in the S&P 500, we no longer are. So we're down less than 10% in the United States. In Mexico, they're down 18% in 3 months. That is a very ugly mess that they've got there in Mexico at the current time. Other charts that look pretty ugly, we've got Canada here down about 10% over the last 3 months. Australia down about 10% over that time period as well. And then, not to be outdone, South Africa is down almost 20%, 19.97% over the last 3 months. So, you're in a world of hurt right now if you are concentrating on those foreign markets, unless you happen to be lucky enough to be concentrating on Brazil. As we take a look at our next 12 grid, let's take a peek now at the U.S. sector 12 grid. This is going to be chart 4G for those of you that are premium market scholars following along at home. All right, as we take a look at this, you can see one surprise element of this market has been the strength of the staples. I mean, we saw kind of little bits and pieces of that a few weeks ago when we saw Procter & Gamble come out with an awesome earnings report. Stock skyrocketed higher, but we've seen stocks like Philip Morris and Altria zooming higher as well. Today we saw Coca-Cola doing really well. Kimberly-Clark had a nice bounce up. So a number of those staples names, those old steady eddies, a lot of them dividend aristocrat-oriented companies, have really been holding up their end of the bargain in this market meltdown. Look at what's happening here. The staples are actually hitting a new 3-month high as of today. So if there's anybody out there that says the entire stock market is in meltdown mode, just remind them of the consumer staples, because we're actually hitting multi-month highs on the consumer staples right now. And again, that's kind of that's the nature of the beast right now. This is a market where investors are mostly fleeing away from the riskiest assets, some of those technology-oriented companies or some of those, industrial types of cyclical companies, and they're trying to hunker down where they view a safe haven. And right now, the consumer staples are viewed as that safe haven. We talked about a consumer staples company last night, as a matter of fact, in my selling puts and selling covered calls trading room. And so, keep your eye out for the bargains that exist out there. But if you're looking for strength, the staples is probably where it's at. The utilities have been holding up better. Notice that the utilities are trading above their moving average, but we do have that pink background color telling us that the intermediate line is at 70.94 and falling, and therefore we have a weekly bearish posture there. But it wouldn't take much if the utilities would go up again for another day or two for that to switch back to a bullish posture. The fact that it's above a moving average is saying something in this type of a market where the S&P 500 looks like this. I mean, it looks like a death spiral way down below that 30-day moving average. So staples, utilities, holding up reasonably well. Kind of coming in third from that perspective is real estate. Notice that real estate is almost trying to carve out, almost looks like an inverted head and shoulders pattern down here. It's not perfect. You rarely have those textbook patterns out there, but the psychology around that candlestick pattern, which is a reversal pattern, does kind of hold true in this development of real estate here, as we've seen this downtrend make way to this mini uptrend right here. So keep your eye on real estate in addition to what's been going on with utilities and staples. But for the most part, the other sectors still have a lot of work to do. You can see technology continues to struggle and is going lower. We're actually going to concentrate on that sector in our trade application here in just a little bit. But you can also see we've got some ugliness out of the energy patch right there. The materials aren't doing much better. The industrials are really struggling here. Discretionary struggling as well. The financials continue to have a bearish posture, but there maybe is a little bit of light at the end of the tunnel there with the financials. That was a nice up move for the financials today, up 1.7%. We have had some oversold cluster signals there recently. So keep your eye on that one, because that's actually day 2 of the bounce, right? You look at, like, for instance, technology, it was down significantly yesterday. Communications was down significantly yesterday. So a lot of today's up move was just to make up from yesterday's losses. But in the case of the financials, they weren't making up for yesterday's losses because the financials were actually up yesterday as well. So just keep your eye on it. It's too early to call that a legitimate turnaround, but it's at least got some glimmer of hope right there that we'll try to keep our eye on. Speaking of the sectors, let's go over here and quickly take a peek at the Market Watch tab, and let's go over here and see which sectors were doing the best today versus which ones were doing the worst today in this little bit more of a risk-on type of a day that we had. And so you can see that the communications area was up 2.37%. Remember, that's the area that Facebook now belongs to. We'll talk about that here in just a little bit as we review some of the stocks that are reporting earnings after hours. So communications had a nice snapback here today. On the downside, we had the utilities, but it was actually a clean sweep in terms of sectors here today. All 11 sectors finished in the green here today. It was just that the utilities were the only sector that did not finish up at least 1% within the S&P 500, so they would have been considered our laggards there. Let's go ahead and take a peek over here on the internet. First of all, remember, many of you do watch these Market Outlook videos on our website over at marketscholars.com. All you have to do is click on the blog menu item up at the top to do so, and you can click on play right here. And while you're doing that, we certainly appreciate those of you that click like down below here on Twitter, and also give us a thumbs up here on Facebook. We try to make that nice and easy and consolidated for those of you that want to do that for us, all in one place right there. So thank you to everybody who does that religiously every day. It helps us realize that you guys appreciate these videos, and I appreciate you 92 folks that clicked like last time around for me. Keep up the great work on your end. Now over here on Twitter, I wanted to quickly point out that the sector selector was produced. Remember, I do that typically on Friday evenings. There's a 2-part graphic that I produced for our premium members. This upper part I do make available to everyone, even the free members. But if you want the bottom portion of it, that includes all the stocks hitting 52-week highs and lows, and how they rank in our GIVE system, which is growth, income, value. Make sure you're signing up for our premium services over at Market Scholars. But anyway, as we look at this top portion of the sector selector, you can see This is a market that in recent weeks has really been gravitating towards the defensive areas. That makes a lot of sense, of course. When stock markets get chaotic, oftentimes you'll see relative strength in things like those staples, things like those utilities. Now, the communications is a little bit different. Remember, that particular sector was just created here at the end of September, and it's a bit more of a mixed bag than you might assume. Obviously, Facebook and Google stole the headlines as far as which stocks were going to be part of the communications group. But remember, it also includes a lot of those old line media companies and also the old school telecom companies. So a company like Verizon has actually been doing quite well price-wise here recently. So it's a handful of those old school companies that have kind of made up for the losses of Facebook and some of those others that has allowed communications to stay as strong as it has here on my ranking system. But you can see that for the most part, utilities, staples, healthcare, and even real estate, those areas are often viewed as a little bit more defensive in nature. So it's not a big surprise to me to see most of those congregating up there near the top of the rankings. On the downside, you got things like technology, industrials, energy, financials, and materials. Those are all more cyclical areas of the economy that are struggling in a risk-off environment. Also, while we're over here, Earnings Whispers does a great job as far as kind of keeping everybody coordinated as far as which stocks are going to be reporting their earnings on various days. And so you can see that today is Tuesday. We have Facebook, we have eBay, we have EA Sports, we have Paycom. I know Amgen reported as well. They can't fit every last company on this graphic here, but I know Amgen was another big one that reported tonight. So a number of those names, even Baidu reported tonight. So let's take a quick little run through just to see how those numbers are stacking up. When Facebook was first released, I do know that their stock was down, and then it went up, and now it's back down again as I've been giving this presentation. So where we stand right now, and of course things can change by the time the market actually opens tomorrow morning, but Facebook closed the day at $146. It was up $4 per share today, so it participated along with the overall market rally. So you can see after hours here that in this shaded area of my chart, that kind of shows you what the after hours activity has been. Right when that report was issued, Facebook's stock price went all the way down here to about $140 or thereabouts before rallying all the way up to a post-market high of $151. Well, as it stands right now, it's gone right back down to the lows, right back down to where it was initially after reporting those earnings, because you can see up here in the bid and the ask, which is moving kind of in real time up there, it's trading at around $140 at this current level. So if we opened up tomorrow morning at this exact moment, we would open up $6 lower on Facebook. And of course, that is a very important company to this market. It's one of the largest companies in the United States, most influential companies. And there was a lot of nervousness coming into it, quite frankly, considering what happened last time. Many of you recall that over the summer when Facebook reported their earnings announcement, the stock was down like 20% in one day. It was the biggest one-day dollar loss in the history of the stock market, just to shed some light on that move. So there was some fear coming into this that things would be, again, a real massacre for Facebook. But at this point, it's only down $6. That's not the end of the world. But considering the fact that the stock was up $4 today, we're hopeful, some people were putting in some hope that maybe Facebook could start turning the ship around higher, along with some of those other FANG names. This is going to throw cold water on that pretty much immediately, because you just gave back all $4 here in the after hours session. Some of those other names that were reporting, Amgen was another one, of course, one of the big granddaddies of the biotech space. Amgen came in, and it looks like they underwhelmed the market as it is trading a little bit lower. This is a $189 stock that's currently trading at around $188 or thereabouts. The last traded price was $187.85, so it's down maybe $1 or $2 after hours. Not a big deal for that company. Baidu reported. Baidu, you can see, is a company that closed at 183 bucks. It's down a couple of bucks as well. So again, remember, these are large share price companies. So when they're down just a couple of dollars on a $183 base, it's not a big deal. So Baidu, of course, the Google of China, maybe underwhelming to a degree here as well. I think I saw MGM reported earnings. You can see that MGM is basically trading in line after that report there. Let's see if eBay is out yet. Looks like they might be. Yeah, looks like they did just report. So eBay closed the session at $27.42 and is currently trading up about, let's call it $1 or so. The last traded price was $28.50. So that's a nice, healthy rise percentage-wise for eBay here today. There was also some deal news. I think it was Arconic. So AR... I always forget what the ticker symbol is. That was the old Alcoa that got split up into two different companies. But anyway, Arconic, after the bell here tonight, was reported to be receiving buyout offers from some private equity firms. So you can see that Arconic is trading up over $1 after hours as well. So for the most part, I would say that today's price activity after hours has been a little bit of a disappointment after such a surge in pricing in the normal session today. And a large part of that is due to the fact that Facebook is just not holding up their end of the bargain after reporting earnings. So with that out of the way, let's now talk about our trade application example for the day. So for that, I'm going to come back over here to the charts, and I'm going to just pull up chart 4A. That'll give us a sense of kind of a 3-month time period using the market forecast thought process here. And I'm going to type in ticker symbol SWKS. This is Skyworks Solutions. Now, like a lot of companies, this stock was up significantly today. You can see that it was up 3.43%. That's an aggressive up move for this stock today. You can see what that candle looked like today as well. Nice surge right there. But despite that, you'll also notice something that should be glaringly obvious at this exact moment, at least. We remain in a downtrend. So yes, it's impressive that the stock was up dramatically today, but this is still clearly a stock that is in a well-defined series of lower highs and lower lows. In addition to that, despite the huge rally today, the background color of the chart is still a dark pink, meaning that we still have a strongly bearish posture on it using the intermediate term line on the market forecast. It remains in that lower reversal zone right there. So we'll just have to see, of course, it's always difficult to gauge how the next morning will open. With Facebook kind of struggling after hours here a little bit, it's possible that some of those tech names will struggle to begin tomorrow's session as well. But what I would like to try to implement at this current moment is what's known as a bear call spread. It's a bearish trade that you're basically hoping a stock stays below a certain level on the chart, and as long as that happens, then you should have the opportunity to make acceptable gains. So let me kind of explain that a little bit more thoroughly as we come on over here to the trade tab. So I'm going to pull up the, let me give you some more room to see this here. I'm going to pull up the option chain here on the Thinkorswim Paper Money platform, and we're going to go out to the December contracts at this point. I like to stick with the monthly contracts whenever possible, but with the November's expiring in only 17 days, there's just not a whole lot of time left on those ones. So your return on risk is usually not all that great with those small amount of days remaining. So we're going to go all the way out here to the Decembers. So that means that this trade will be implemented for the next 52 days at this point. Now, when we're selling a bear call spread, it involves two different strikes, and they're both calls. One of the calls will be selling, that'll be the driver of the trade, and another call will be buying, but the whole reason that we're buying that call is just effectively for some protection in case we're just flat out wrong with our analysis. So I'm going to come over here and I'm going to start looking for an attractive candidate starting with a delta around 30. That's usually where we start looking. So notice I have this delta column set up here on the call side of the equation. So as I kind of scan my mouse down, the closest one to a 30 delta is this 27 delta right here. That lines us up with the 92.50 call option. So what we'd be doing is selling the 92.50 and buying the 95 as part of this bear call spread. Buying the 95 call is our built-in hedge in case the stock ends up going way above 95. But the way that we're looking at this right now is bearish. It's still in a downtrend. And so what we want to accomplish with this type of a trade is for this $85 stock approximately right now to stay below 92.50. So in other words, this is a bearish trade, but we have the flexibility of being wrong by $7.50 per share to the upside. So you don't have to be spot on with your technical analysis when you're implementing this. Sometimes it's better to be lucky than good. So if this stock does have another big up day tomorrow, let's say it's up another $3 tomorrow, that doesn't necessarily have to mean the end of your trade either. As long as that downtrend holds going into December, this one would stand a decent chance of still being a profitable idea for you. So let me show you how to set up that trade. So I'm going to again come over here to the bid and the ask of the 92.50 call, right click, going up here to sell vertical. And so that loads up our trade where we're -1 on the 92.50. That will be the driver of the trade because this is going to be a credit spread where we receive money up front, and that 92.50 call is going to be more valuable than the 95 call that we're buying. Notice we have a +1 over there. So -1 on the 92.50, +1 on the 95. That sets up what's known as a bear call spread. Notice that we're going to receive 57 cents worth of credit at this juncture for this. Again, who knows, what happens with the start of the market tomorrow. But as of today's close, we had the opportunity to do this trade at 57-cent credit, which is basically right at that 30% return on risk. Remember, you can do that math by clicking on confirm and send once and taking the max profit of $57 and divide it by the max loss of $193. And what you'll find is that return on risk is right at 30% if you're rounding. So anyway, that seems to be acceptable. Notice right here, the break-even price would be 93.07. And so another thing that you'll want to do as you're starting to consider some of these various trade ideas is look at the break-even price and ask yourself if you agree with the thesis or not, because some of you will disagree, and that's fine. Remember, that's trading for you. Every buyer needs a seller, and also the opposite of that. So we'll disagree with each other plenty out there, and that's completely fine. So 93.07 is where we want this stock to stay below into the December time period. So we want to check the chart and ask ourselves, okay, 93.07, where would that be on the chart? It would be about right there, kind of where I'm pointing with my mouse, right in that neighborhood. Now notice where that kind of lines up. It lines up with the topping out part of these two candles over here. So it can be a good reference point as you're eyeballing this chart. You have to ask yourself this question. Do you believe this stock will stay below the high levels of these candles right here going into the December time period? Some of you might think that the stock market is going to struggle for the next several months, and if that's the case, then this might be an acceptable trade. Others of you will say, well, I expect the stock market to rebound strongly going into the end of the year, and therefore you're probably not going to want to take a trade like this. So in the end, whatever you decide is your decision and yours alone, but clearly this is still a stock that has a bearish posture and therefore is acceptable to do a bearish trade on. So that's our trade application example here for the day. Let me go ahead and click confirm and send one more time, and we'll send that in and see if we can get filled tomorrow morning. All right, well, I want to thank you for joining me here tonight. It's always a pleasure to go to work for you. Nice snapback rally in the market today, but let's not get ahead of ourselves. Remember, we got a lot of work to do before we get back to a truly bullish condition. Most of the indices remain bearish at this point, but there are some pockets of strength out there. Brazil, from an international perspective, is strong, and then those staples. Consumer staples hitting 3-month highs as of today, so keep your eye on that area as well. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.